Well, the first thing we want to do here is to do a replay of what our expectations are before we start thinking of what today is going to be like. Well, where were we as at yesterday? So as at yesterday's live session, we were around the $84.50 area here. And with the situation of things yesterday, before the live session yesterday, we were thinking that we might be having a trend continuation pattern. And one thing we said here after identifying the consolidation phase here between the $85 level and the $84.50 area, and we said if we're going to be having a breakdown of that structure evolving into a trend continuation pattern in the form of a breakdown retest of structure, we want to be joining the decline to the downside. And remember, I told you something here yesterday, is that if price does not go to the downside, and if we are going to be thinking of buying the US oil, we want to see a breakout of the $85 level, which is exactly what happened during the course of the New York session yesterday, as we saw this engulfing candle taking price right out of the $84 area, which has been holding buying pressure for over 24 hours. And that was a very good signal for us to take advantage of that bullish momentum. And remember, for those who took advantage of this opportunity here, right below the $88.20, we took advantage of this bearish momentum at the beginning of the week. Remember, I told you all to move your stop loss to somewhere right around the $85 area, just in case we might be having a rally. And this is exactly what happened. We were taking out all of our previous position with about well, the first position closed with over 300 pips in profit, and then the second position closed with about let's see, about 250 pips in profit, with a minimum of about 550 pips in profit thereabout, which is not bad anyway. And we took advantage of this bullish momentum right above the $85 area as price has continued to move in our direction. So with the bullish momentum running at this point in time, the first thing I'll be saying right here is to move your stop loss accordingly so that we can lock in some profit. We don't want to get caught up in any sudden pullback that might likely happen at this point in time. So what we want to do here, what we want to be doing here is to move our stop loss somewhere right below the $86 level. This level has been the major determinant of price action in the past. Remember, I will be sharing that with you in a moment. So let's just lock in our profit at this point, and let's see what our expectations will be like for today. So to do that now, we want to scale up to the daily time frame. We want to see what is really going on the higher time frame, after which we are going to be coming back to the 1 hour time frame to make a decision for today. So with that being said, let's dive into the daily time frame and let's see what is going on right here. Okay, so we have the daily time frame loading up. Okay, give me a moment, please. I'm trying to set up something here. All right. All right, so we have the daily time frame opened up. Let's reset this a little bit so that we can have a better perspective into what is going on here. So here we go. We have the daily time frame running. And the first thing we obviously observed here on the daily time frame is that price action has been on a long-term bullish momentum. And as a result of this, we were able to connect the series of lower highs here to give us that resultant bullish trend line that has been holding bullish momentum since 2021. So we have this bullish trend line holding price action. Then the next scenario we want to be looking at here is the key level at the $86 area. And you can see how this key level has been a major determinant of price action, at least in the last 3 to 4 months. We saw how this key level at any point in time price comes within that area, we begin to see either a buying pressure or price breaking down or breaking out of that structure to incite a movement in the direction where price was broken to. So we had a situation here where price was participants in this market gathered here to buy the US oil. That was in the month of August. And if we fast forward into the month of September, we saw how this level was also holding buying pressure, but the pressure here wasn't that strong enough, as it was met with a very strong resistance from the sellers, which finally pushed price right below the $86 level in the month of September. And throughout this month, price continued to trade right below the $86 area to give us a clue of how strong the sellers are at that particular point in time. However, during the month of October, we saw a final breakout of the $86 level, which also shows a confluence with the bearish trend line that we identified here. So we have both the breakout of the trend line and the breakout of the key level at the $86 level to incite a bullish signal. So we had a breakout of the structure, and like I told you, this is a reflection of the OPEC Plus decision a couple of months ago to cut oil production, and this was reflected on the chart with this engulfing candle which took price out of the $86 structure. And as soon as price got into the $93.50 level, we started seeing selling pressure around this area. In fact, we saw one in the month of October. I think the first week of October, we saw selling pressure here, which incited the retracement phase of this impulsive move. And from a technical standpoint like this, whenever we have a breakout of a structure like this, but the bearish trend line, the key level here, we expect that price is likely going to come back to do a retest of that structure, which is exactly what happened here. So we saw price come back to do the retest of the structure, evolving into a consolidation phase, which at this point in time looks more like a reversal pattern. We saw the breakout of the $86 level one more time. Price did a retest of that structure, and we enjoyed this bullish momentum once again right back into the $93.50 area. And there is something very peculiar about this $93.50 area, and that is participants in this market are seeing this area as a selling niche to sell the US oil. So as soon as price gets into the $93.50 level, we started seeing selling pressure from that area to negate all buying momentum. And the same thing happened last week. We saw the selling momentum here, which pushed price again right back into the $86 area. Now, going into this new week here, at the beginning of the week, we identified a structure here at the $89.50 area. And the reason why we identified that area was simply because this level, as at one point in time, has been holding selling pressure. If we go back to the month of October, I think the second week of the month of October, we saw how this level was holding selling pressure. The same thing happened during the later part of the month of October. We saw selling pressure around that area. Though we had the breakout here, price came back again to do a retest of that structure, and then which led to the breakdown of this bullish trend line that has been holding price action in the last 4 to 5 weeks now. So we saw this bullish trend line broken to the downside, showing a confluence with the $89.50 level. And from a technical standpoint, whenever we have a breakdown of a structure like this, we expect that price will at one point in time come back to do a retest of structure to incite a trend continuation to the downside. So at the beginning of the week, we enjoyed this momentum to the downside. Remember, we took advantage of this move right around the $89.50 level, and we saw this engulfing candle that took price right back into the $86 area. So at this point in time, this is where we are as at today. And one thing we have observed here in the last 24 to 48 hours on the US oil is that the $86 has continued to remain a demand zone for participants in this market as we continue to cite buying pressure around that area. You can see this engulfing candle coming right back into this area. It was met with another buying pressure here. I am of the opinion that we might be having another respect of this key level one more time, which also shares a confluence with the bullish trend line that we identified earlier. Remember, we identified this green bullish trend line, so we can see again this key level also lines up with that bullish trend line, and I'm of the opinion that we might be having a bullish momentum during the New York session today. So with this information we have gathered here on the US oil daily time frame, let's scale back down to the 1 hour time frame. Let's look at what is really going on around here, after which we are going to be using the structures around that area to make a technical decision on this one. So in order to do this, we want to scale back down to the 1 hour time frame. Let's see what is going on the 1 hour time frame, after which we want to be making our decision as projected. So this is the scenario we had here. So since the beginning of the week, we have been very profitable on the US oil. We took advantage of this bearish move after price came back to do a retest of this bullish trend line. Remember, we had this bullish trend line broken here to the downside to signal a bearish momentum, and we were fortunate enough to take advantage of that move when we started seeing reversal patterns around this area. So we joined this decline around this area at the beginning of the week right into the $85 level. And in the last 48 hours here, we can see how the area here between the $85 area and the $83.70 area has been holding buying pressure. So we can see here we have this buying pressure around this area. In fact, after looking at it technically, I was able to see something that looks more like an inverse head and shoulder pattern. Let me show you what that is. So we had this impulsive move to the downside. We have the left shoulder here. Price came back into the $85 level, which at this point in time is serving as a neckline of that reversal pattern. We saw the head here. Price came back to the $83.70 level. Price came back again to the neckline area at the $85 level. Then we saw the right shoulder here before the breakout of the $85 area, whereby confirming a mature reversal pattern as we saw the breakout of the $85 level. Now, with price breaking above the $85 area, I'm of the opinion that we might be having a reversal pattern going on here. And if we look at what has been happening here since the beginning of the month, we can see how the $85 area has been holding buying pressure since the beginning of the month. We saw an attempt here at the beginning of the month here. Then if we fast forward into the second week of the month of November, we saw another buying pressure around the $85 level, and this made us to identify this area as a demand zone, as this area has been negating all selling pressure at this point. So now with the situation of things now, considering what happened during the later part of yesterday, we saw the breakout price climbing right above that demand zone area, and since then price has been trading right above this level. So I'm of the opinion that this trend continuation might continue to the upside, and as a result of this, we took advantage of this move right at the breakout of the $85 level as price moved over how many pips in profit? Price moved over, let's see, over 250 pips in profit to hit the $87.60 area. So now what happened here also was an interesting situation. After this impulsive move to the upside, we saw a retracement phase back into the structure. So I was able to identify a golden zone area after bringing out my Fibonacci retracement tool to locate an area between the 50 and the 78.6% of the previous impulse leg. So when I brought out my Fibonacci retracement tool and we run it through the previous impulse leg here, so we have somewhere between the 50 and the 78.6 as a buy zone where we want to be looking out for buying opportunity. I shared this on my TradingView platform this morning, and I said, okay, fine, if price comes within the structure and we start seeing buying pressure around this area, we want to be adding more position to our existing trade. And lo and behold, this is exactly what happened. We started seeing buying pressure around here, and hereby making the neckline, the key level at the $86 area, has a neckline for further buying opportunity. So price broke out of that structure and price has continued to climb to the upside. So at this point in time, for those who are taking advantage of the second opportunity here, kudos to you for being on standby to take advantage of this move. So the next thing we want to be doing, like I said earlier, is that we want to be locking our profit by moving our stop loss accordingly to somewhere around the $86 area, and let's see how price action is going to play out from this time on. Now, for those who had missed out on this opportunity here, that is both the one we took at the $85 level and the $86 area here this morning, let's see if the market is going to be presenting us with another opportunity to either add more position to the existing trade or join afresh. So what I'll be doing here is to bring out my line chart. As we can see, since the beginning of the week, we have been witnessing buying pressure, hereby giving us a trend situation that looks more bearish at this point. So what I want to be doing now is to connect the series of lower highs here to identify this trend to the downside. So if we connect the series of lower highs here, hold on a second. So as you can see what we have on the screen, so I was able to connect the lower highs here. The first touch here was here. We had that identified, and we have this one too identified here, and then we have another one here around this point. So what we will be doing is to bring back our candle chart and look at what the structure is saying. So we've been saying that since the beginning of the week, price has continued to find lower lows and lower highs. And now at this point in time, we have a situation where price has broken that trend line a little bit to the upside, though we are still around that area. So we are at a very critical point in this market. So all we want to be doing is to see if price will continue to trade right above that bearish trend line. So we want to be seeing a situation where we see an engulfing candle taking us out of that structure. And if price comes back to do a retest of the trend line, then we want to be thinking of adding more position to this existing trade. So that is one scenario we are going to be looking at as we head into the New York session. Then the other possible scenario I am seeing here is the, hold on a second, the $87 level. As you can see how this level has been holding. At one point in time, it's held buying pressure here at the beginning of the week, somewhere here before we cited the breakdown of that structure. And during the course of New York session yesterday, we saw a retest of that level as well at this point. So what I'll be doing here is to extend this a little further to the future, and let's use that as another yardstick for trading opportunity for today. So we have this level labeled at the $87 area. So for the sake of clarity, let's have this labeled. So we have the $87 area figured out at this point. So for those who had missed out on both of this opportunity here, the one here and the one here, then let's see, since price has already broken out of the bearish trend line, you could join outrightly from here, but I will be suggesting that we remain patient and wait for price action to break above the $87 level. We have an engulfing candle closing right above that structure. Look out for selling pressure as price comes back to do a retest of the $87 level on our lower time frame to join or add more position to the existing trade. So at this point in time, I will be thinking of where we might take profit target B with the current structure that we have here. Well, for me at this point in time, if we zoom out a little further, we can see how the $85 level has been a strong demand zone. So we can see that this level has been negating all selling pressure at this point. So one thing I'll be advising us to do here is to extend our take profit target to somewhere around the $92 area, somewhere around here, $92.50, $92 area. And the reason is simply because of the structure we have here. We saw selling pressure around this area during the course of last week trading session. So let's see how far this momentum is going to go. But there is a catch here. So as soon as price continues to the upside and with our take profit target around the $92.50 level, what I want to be advising us to do is that as soon as price gets into the $89.50 area, an area which has been the selling pressure since the beginning of the week, we had it broken here to the downside. If price comes within this level, kindly move your stop loss accordingly to protect your previous position. Somewhere around the $88.20 area is most likely to be presentable at this point. And if price continue further to the upside in such a way that we have a breakout of the $89.50 level, retest of structure, then we want to be adding more position to our existing trade, hereby pushing further the take profit target further up, probably to the $100 area. So that's how we want to be trading the US oil. If you have any question regarding what I've just explained so far, feel free to drop in your inquiries in the comment section, and let's see how I can be of help in that regard. So I will be taking the next 10-15 seconds to read through the charts and see if there are any questions, and if there are no questions, we'll just move on to the next pair.